JD, Copper Mountain. Hudbay Minerals buying Copper Mountain. Bit more action in the copper scene. You've gone deep into this, mate. What is happening?
That's it. More action in the base metals, the critical minerals sort of space. So I'll give a bit of a high-level view of what's happened here. The deal values Copper Mountain at US $439 million. They're being bought at a 23% premium to the 10-day VWAP. It's an all-scrip deal. Already got board approval. It'll just require shareholder approval on the part of Hudbay as well as Copper Mountain. It'll involve the company Copper Mountain that is delisting their CDIs, a topic we spoke a bit about yesterday. And I think this is sort of in line with their strategy. It'll be an America's focused business. They sold their Eva Copper project last year, so it doesn't make too much sense to keep those CDIs listed in Australia. A little snippet that stood out was the joint production for 2023 of the combined entity will be over 150,000 tonnes of copper in the second quartile of copper cost curve. Not every day you see a company flag themselves not in the first quartile, so that was interesting.
Honesty's the best policy, eh?
Oh, that's it. So getting into why have we seen the deal happen today? So last year, Copper Mountain cut their production in half at their operation, also called Copper Mountain in British Columbia. The cash costs of the production more than doubled to $3.53 a pound US, and that was on 24,000 tonnes of production. So no sort of hiding that they just performed pretty poorly there, and Hudbay thinks they can come in, de-bottleneck the operation, potentially add a bit of equipment and just smooth that out. And then we saw that buzzword that we always see that Trav is quite familiar with, Synergies. They reckon they can save $30 million every year across all their different assets. So what's the real story here? I think
we should talk about mining synergies. It's a pretty good topic.
Absolutely.
So yeah, I mean, in mining there are genuine synergies when you can benefit from two ore bodies that are sharing the same infrastructure, be it a plant or roads or something along those lines. The typical case though in mining is that it's a lot harder to have synergies when the assets are quite far apart. You can just save on some corporate synergies, which just means you only need one set of CEO, CFO, et cetera. And I think you can save on some administrative fronts there.
Yeah, and I think that's what Hudbay's highlighted here. Their assets are spread across North America, South America, so it's really corporate synergies that'll make up what they're talking about when they highlight synergies in this deal. So we've seen a lot of consolidation in the commodity space over the past few months, really. Newmont, Newcrest, Mincor, Wyloo, BHP, Oz, Liontown and Albemarle, Glencore Tech, the list goes on a while there. China's been doing this in Africa across various commodities for quite a while now, and it seems like Western companies and countries are sort of catching up on that. We also saw exploration jump to $2.8 billion, particularly in the copper space, that is, to an almost 10-year high. It hasn't really been matched by more discoveries, which from the company's point of view is quite disappointing. And bearing in mind just how long it takes to build a mine, I think it'll be in government's interest to promote these things, and it's why we're seeing a lot of these companies make these acquisitions of already producing assets, because they don't want to wait around for a sort of surplus becoming a deficit in the copper space that they see over the coming few years. So what's really driving the consolidation in this sector? Right now, it's a bit opportunistic. We've seen commodity prices be a bit weak over the past few months. That's sort of on the back of global recession fears and whatnot. There's been poor performance in a number of the names we just mentioned that are being acquired. So if you were to compare Mincor, Oz, Newcrest, all those companies with what their share price had been roughly a year or so before the acquisition, then I think the majority of them are down quite substantially. So then we get to the real reason why we're seeing a lot of acquisitions in the space. There's just very few options. You can just do a quick search and look for copper producers and copper companies on the ASX, and you'll get 10 or so hits, and they're not all producing either. So there's really not too much there. And a lot of these
these companies, they have a growth problem ultimately that they have to solve. They've got to persuade that they can't get growth from the drill bit.
Exactly. You look at assets all through the Andes and South America, and the grades are just falling and falling and falling. The mines are getting deeper and deeper. The energy costs, the water costs that all of these things need are increasing. So people are looking pretty far and pretty wide for these sorts of assets. They're going to Mongolia. A lot of companies are going to Africa and to places that are relatively high risk in comparison to Australia.
PNG.
Exactly.
Had to drop it in there. I haven't mentioned PNG for a few days. Sorry, lads. Keep going,
that's
JD.
it. The Congo as well. There's some companies that aren't that afraid to go on there, and that's certainly highlighted by Chinese companies that aren't afraid to go there and do business there. So
you look at how many drill meters, exploration meters, Sandfire put in and around that DeGrussa project to try. They found the 1 million tonne Monty deposit, but the amount of drilling they put in and elsewhere in exploration for 10 years, and their share price is only it's had a bit of a tick lately, but they've just essentially done nothing for a decade.
Yeah, talk about looking far and wide. They paid $2.5 billion, I think, for Matsa, which is ramping up to nameplate capacity. They've got Matheo coming online in Botswana. Interestingly, the neighbouring asset there, which is held by a private equity group, looks like it's coming up for sale. So we'll see if they'll be getting their hands dirty acquiring that again.
That's Comical.
Exactly, yep. And also, of course, the new CEO starting there, but really looking into which companies could be next, who else could be acquired it's quite an interesting sort of discussion when we talk about the majors wanting to secure production and secure reserves and resources. Companies like 29Metals, their stock price has halved on the issues that we sort of flagged, speaking about Ernest Henry at Capricorn Copper for 29Metals. But a lot of the names are quite complicated. You look at AIC and they've got between FMR and between the directors there, 40% of the stock held, so that wouldn't be an easy acquisition. Aeris Solpats owns about 30% of the company. Carnaby have got a maiden resource coming out this quarter, so it'll be interesting to see how that sort of plays out. Caravel have a project that will require a huge amount of money if that can be developed into a mine. North Park's up for sale, rumoured in New South Wales. So there's a lot of action, and I think it's a space we've seen a lot of institutional investors move into and looking to move into.
Yeah, the ASX space is very few producers. There is a handful of developers that have had a resource for a long time that's never been developed because it's a big capex number, and I think that funding equation, the tides are turning and some of those projects look more financeable now than they have in a long time, but they're going to need capable teams to come in and help build these projects. Rex Minerals is another one that comes to mind on that front too.
Do you see copper to be a bit different to commodities like, say, lithium? So look at Albemarle were proposing to take over Liontown because they're wanting to secure lithium supply for their downstream facilities. But let's say look at a copper producer like Sandfire. Is it a bit different in the copper world? Do you think that they're not seen as a takeover target for someone to secure copper supply?
I think the majors would definitely be interested in securing supply, whether that's in nickel, copper, lithium. I don't think the commodity really matters with regard to whether these companies want to secure supply.
Would they want to secure it, hoping, like anticipating there's going to be that uplift in copper price?
Well, I think like if the copper and lithium are not a direct comp in terms of the supply. The way the market, I mean, like copper is subject to a very sort of active trading market. Lithium, not so much. And so, like when a company is getting finance for a copper mine, it's the traders, like the Trafiguras of the world, etc., can come in and make that financeable. That same sort of market participant doesn't exist in the lithium market. So I think like you haven't seen the same level of downstream interest in copper security purely because you have a much more liquid market that's facilitated by these other market participants and a liquid LME ticker.
I think in the sense of majors wanting to have a portfolio of assets, and of course, why are they doing that? Because they think these assets and these commodities will appreciate in prices. That's the core reason why they're doing it, though. So completely agree with what you're saying there, though, Trav. But they're in the business of making money, and if they think copper's going to go up in a few years' time, that's why they're securing these assets.
Beautiful. Oh, it was supposed to be a casual Friday, lads, but she was a pretty busy one.